All right, everything looking good. Let's go ahead and get this stream started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is Wednesday, April 5th, 2023 at 8:05 p.m. Eastern Standard Time. And as always, before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. All right, so we do have a few member requests that we're going to go over today. And also, I do have a little bit of a hard stop. So this is going to be a little shorter than usual. But I do have some static videos coming out for you on a couple of important assets as well. So keep your eyes out for those. All right, so let's just jump right in over here. Do a little speed run. So just starting with TNX on the daily here. So we see some very important stuff going on here. More important than anything, we took out that previous low. So we close now at a new low. So we have a high, then we have a macro low, then we have a lower high, and now we have a lower low as well. So we're still in the process of this correction. We don't know when and where it's going to stop. But we can just use some of our key areas. So we had this little channel that we're operating inside of. We broke out of it. We found support on it multiple times. As it sort of trends lower though, we don't have to actually break back inside the channel. So it could still act as support, but more likely than not, seems like we're going to fall down into that channel range. And if we do, that's essentially the market accounting for about a, 50 basis point decrease. So we'll see if that happens. Obviously, key areas that we're testing here, we bounced quite a bit off the 200 exponential and simple. Now we broke down to a new low. We would expect to push down to the downside now, and then at some point in time, get a back test. And then when we get back to that 3.5 level, that's when we'll see. And realistically, we know what that's going to line up with timing wise. Obviously, it's going to be the next Fed meeting. So the 210 spread, we'll just zoom in here and take a look. Obviously, we've been paying attention to the 210 spread for quite some time now. And if we just look here at the top of the range, we see once they inverted here, the blue area turned to this orange area. And then, man, these are like the worst colors ever for this. And then once we got inside that, we have basically this orange area is the spread. So we see it was widening here as we were going up. And also as we came down, it tightened up a little bit, but it's still a decent spread. So what we're looking for, and everybody always talks about the 210 spread and the inversion and all that stuff. We know that that's not actually what matters. What really matters, what actually tells us something useful, is not the actual inversion itself. It's when they uninvert. So we see here on this chart, all of our red arrows are where we uninverted. So this is the cyclical top. This is where the yield curve uninverted initially, and then we break down from that level. And then here we have, once that 821 bear cross happens, we have the yield curve inversion, and then we break down, and then that's the uninversion of the yield curve once it turns back to that darker blue color. So we see every time, realistically, that the uninversion happens, the cross at 821, and then we get that recession afterwards. The white line, obviously, if you're not familiar with this chart, and I've been just ripping through it here, so I'm sure you have no idea what's going on. This is that same chart we've been using forever. That we predicted the yield curve above 5% with. And all that says is each time we had that recession, with the one exception in 1995 right here on this chart, each time we had that recession, the white line, horizontal right here, vertical right here, before that happened, the uninversion took place. So here the uninversion at the recession. Here we see the uninversion very, very close to the recession. Here we see the uninversion very, very close to the recession. And then here we see, obviously, this was a little bit of an outlier, but we see the uninversion take place right here. And then that's our COVID recession. And now here we see we're still inverted for now, but we're starting to trend back down. Assuming that this trends back down here and we do move down to that level, we would expect a recession sometime around that level as well. So, where is that going to be? We don't know yet. Obviously, we could continue to go higher, but roughly sometime around, that's giving us somewhere around like mid 2023. So there's a little 210 spread. So VIX is next. So VIX still at the bottom of that descending range. Pretty exhausted right here as we essentially approach like zero on the VIX. We're not quite at zero yet. We're at 3.56, but it's out of, it goes from 0 to 100. So we're pretty much the lowest possible volatility. So are we going to bounce from this level? Historically speaking, we had touched the bottom of this level once, twice, 3, 4, 5, you know, call it just once right here, whatever you want to call it, but we're at the bottom of the range. We know when we're at the top of the range, we assume volatility is going to come down and prices are going to surge. When we're at the bottom of the range, we assume volatility is going to go up and stock prices are going to drop. So it looks to me like we're due, or arguably after all this and that little pop right there, come back down to the range again, we're due for either another pop back to the upside for another lower high, or maybe we're going to break down and volatility is just going to go to 0 and everything else is going to go to infinity. It is possible. Those money printers turn back on. We're going to talk a little bit about the inflation when we get to gold. We're going to spend a little extra time on that, looking at the inflation indicator and see how that corresponds. Somebody let me know in the chat everything's coming through loud and clear. I would greatly appreciate it. So moving on to U.S. oil next. So we got that gap up that we were expecting, the back test of the 200 exponential and simple. We hit that key level, the super technical squiggly zone, also corresponded with the 236 in blue right there. And we know what that means. That was already planning on happening. The market just needed a reason for it to happen. And the reason is OPEC cuts. And we know for a fact, based on historical reference, that every time OPEC cuts supply, that's not a good thing. They're not cutting supply because they want to teach the USA a lesson. They're not cutting supply because, you know, whatever stupid narrative people are talking about. That's not why they're cutting supply. They're cutting supply because they know if they oversupply the market, the price will fall. It's all about supply and demand dynamics. So OPEC can't really affect the demand. The demand is what it is. They're trying to anticipate that demand based on what's happening in the market, and then they're trying to adjust supply accordingly so they can control price. So that's the most important thing you have to understand when we're dealing with OPEC or really anything like that. You know, whenever you have like a global sort of like monopoly, kind of like, you know, gangster, good old boy situation going on. Okay. What are they trying to do and what is the lever they're pulling? Because we know there's 3 big things. There's supply, there's demand, and there's price. So if you pull one of those levers, the other 2 things will be affected. It's just a matter of how they're affected. So when OPEC pulls the lever for supply and they cut supply, which it's not even that much really when you think about global supply, but when they cut supply and they pull that lever, they're doing it because they think demand is going to fall in the future and they're trying to keep the price high. So if people were saying, you know, they're doing it to be mean to the US or the West, or they're going to teach them a lesson, you know, by pushing up the prices, sure, whatever your narrative is, whatever you have to convince yourself, the reason why something's happening, by all means do it. But the easier thing to do is just understand the mechanics of it. Like if you have a bolt and you screw the bolt in, it gets tighter. And if you screw it out, it gets looser. Like that's just understanding the mechanics of it. Why, you know, you don't need to know why the bolt's being screwed in. You don't need to know what 2 pieces we're attaching with that bolt. You just know, hey, when the bolt goes clockwise, it gets tighter. When it goes counterclockwise, it gets looser. So that's the best way to do it. So when we look at the supply, when we look at the demand, when we look at the price, we know that those 3 things are going to be affected by each other. So when OPEC is cutting supply, they're doing it to try to maintain prices. So the initial bounce might be a push back up, but really what is it? It's a bear market on oil. It's a bear market on oil prices. OPEC knows that. You know, I'm sure they have a guy that's at least as good as technical analysis as a random dude on the internet with like 30 subscribers who shakes an 8-ball and just tells you what it says. I would imagine, you know, the Saudis and all those big oil moguls have somebody working for them that can do technical analysis. So they're probably seeing the same thing I am. Less demand for oil means prices are going to drop. So if they limit the supply, it may be able to maintain those prices. You know, are they just trying to maintain them above 60 so they can give a little bit? Does it have to be above 70? I mean, you know, that's all up to the OPEC. That's all up to, you know, producers, whatever. The most important thing, though, is they are pulling the lever supply. They are cutting supply because the demand is not there. Because I'm going to tell you right now, it's an easy way to solve any problem. We just look at the extremes. You know, one extreme or the other, okay? What if suddenly tomorrow there's unlimited demand for oil, but there's still the same supply? Price goes through the roof because people still want it at any price. Price goes up because there's only so much supply. What if tomorrow nobody wants oil? Price goes to 0. We saw that happen in real time. It actually goes negative because it costs money to like deliver and store oil. We know that. Those are our 2 extremes. You know, 0 demand, infinite demand. So if we just look at that and look at the extremes and then we say, okay, well, it's not going to be 0 demand, you know, so they cut supply, but we know demand is falling or they wouldn't be cutting supply by, you know, whatever, 1 million barrels a day or whatever. So that being said, we know what's happening here. what the market reacted to was OPEC's response to what's happening. Oil demand is falling globally. Full stop, fact. OPEC cut supply to try to maintain prices. The market saw that as an opportunity to move up because it had to reevaluate the current situation, value of oil, however you want to look at it. It got new information. It adjusted based on that information. The only difference is instead of being right here at 75, now we're at 80. So there's a $5 difference in price. At some point in time, we're either going to continue to the downside and close that, move up there, or maybe we break out to the upside and we go higher from here. Who knows? But what I know is we've been in the same range forever. We had a little breakdown right here, but we're in that same range. So anybody that's excited about this move in one direction or the other, saying, oh, Biden, they should have refilled the oil reserves when they had chance. It's not like they're just like write a check to like fill back up like the strategic petroleum reserves. Like it takes literally like months, years to fill them back up, and we're talking about like contracts. This isn't the type of thing where it's just like, all right, I'll stop at the gas pump on the way home and, fill the strategic petroleum reserve back up. Like people are just idiots. They have no idea what they're talking about. So if you want to say anything, about the administration, and you guys know how I feel about politics, they all suck. But the fact of the matter is they made a great trade. They dumped them when the price was high, and now they could still refill them substantially cheaper. And I'm not convinced that we don't go cheaper from here. And apparently neither is OPEC, because they're literally cutting supply to try to stop the oil prices from going lower. So say what you want to say, but when is a good time to use strategic petroleum reserves? Maybe when there's a land war, in and around our allies. It seems like a good time. But anyway, we don't need to get political. That's it for the oil. Dow Jones is next. So what's going on with these major indices? We saw some weakness just kind of hanging out here. It's really not that bad for now. We found support at the 200 simple. We're back on top of both of them. Just consolidating, trying to pick a direction. As long as we're consolidating above the 200s, looks okay. We did just use a lot of energy coming from the bottom of the range all the way to the top of the range. And all we did was just go from here to here. So if we do roll back over and go from the top of the range to the bottom of the range, what we're going to pay attention to is each time we do that, are we putting in higher highs or higher lows, or lower highs or lower lows? And so far we have this low right here, and then we have a lower low, and then we have a series of lower highs as well. So I would expect us to put in a lower low, which is fine. Holding above the 200 exponential and simple is ideal. Maintaining this momentum, the bullish control zone, all that good stuff is ideal. We've obviously talked about this situation quite a bit. The inverse head and shoulders, the potential to breakout and new all-time highs, that would likely be fueled, by inflation. Whether it doesn't even need to be the money printer turns back on. It could just be, hey, inflation stays at 4% for the next 5 years. What do you think GDP is going to do? GDP is going to go up because everything costs more. So regardless of if like real inflation adjusted GDP goes up, no, we haven't had like positive increase in GDP in like decades. This is inflation fueled GDP. And, what's that do? It makes everything else more expensive because we're essentially taxing the people through devaluation of the currency, which is fine. I mean, or it's not. I mean, I guess it's fine because they're doing it. So that being said, Dow Jones, well on our way back up here. Still looks okay as long as it's above the 200s. I still like how it looks. We didn't quite get down to our target right here. Maybe we're going to test down lower again. What we're paying attention for is where do we break through first? If we break through to the upside through all this resistance, we're going to new all-time highs. If we come back down here and break these lows right here, the real target is like 30,500. Otherwise, retest of the lows. It could go either way right now. And we know that because every single thing on planet Earth is trading like give or take a candlestick away from its 200 moving averages. So whether you're bullish or bearish, nobody knows right now. It's literally a coin toss on everything, with the exception, 99% of things. So SPY is next. Looks very much the same, just pinching into the range. Here we see a low, we see a higher low, we see a higher low again. Here we see a high and then a higher high and then a lower high so far right here. But then if we look back here, we have a high, then we have a lower high. So we're basically just kind of squeezing into a little triangle. We don't know where it's going to break. We don't have like a beautiful, like pattern that everybody's seeing exactly the same way. There's a million different points that we can connect. We can do something like that. And then it looks like we're still pinching into a triangle. We had this little channel up. We broke out and retested the top of it. We'll see for now. We're hanging out at a bunch of support, a bunch of resistance. Most important thing is above the 200s and they're blue. That doesn't always stick. Obviously here it looked okay and then we broke down. But as long as we're putting in higher lows, as long as we're putting in higher highs, and as long as we're above the 200s, I'm bullish. I'm bullish. It doesn't mean it's a great time to enter positions, but I'm still bullish on the markets. Hey, appreciate you, Mark. Good to see you, brother. Sound and offset, everything's coming in loud and clear. All right, so triple Qs are next. So we see the NASDAQ back on top of the 200s. Both are blue, slope to the upside. TJD, TDMACD, beautiful move up here. It is seeing a little weakness right now. We are at a lower high. If it was to roll over and continue down, it would print bearish divergence. That's what we're looking out for. Same with the jewel thief right here. If it rolls over right here, continues down for another day or two, it's going to print bearish divergence. And then likely we get the retest of, you know, at least the 200 exponential, if not 200 exponential and simple again. It's not crazy to keep bouncing off of the 200s and testing them until the market makes up their mind. So IWM looking extremely weak. So the Russell looking like trash. I mean, basically, as always, it's always trash. You know, there was a couple of times here when we didn't put in a new low. A couple of times here we broke out kind of strong where people were talking about the Russell. I made a very convincing case on why the Russell is trash. And if you don't remember, it's, well, just to sum it up, it's because it's zombie trash. So there you have it. Don't worry about the Russell because it's zombie trash. Why does it look like trash? Because it's zombie trash. So I think we got it. We don't need to understand why so much as we just know the bolt's getting tighter or the bolt's getting looser. Beautiful analogy. Whoever made that up. Mwah. So XLE is next. So we saw this little gap back up here. Obviously with the OPEC adjustment, we do see a bunch of green histograms, hard buy signal, pretty aggressively angled stochastics right here. The most important thing I'm looking at is we've basically just been consolidating in this range for quite some time now. And at this point in time, we have a pretty hard resistance here at the top. We have higher lows at the bottom. That is technically a bullish pattern. So even if the oil prices don't go up from here, keep in mind that the producers, you know, or oil related companies can still continue to have higher profits. And unlike the actual asset itself, it's based on, you know, how much money the company's making, not necessarily just a straight up price of their product. So we know that some of these producers can still make extremely ridiculous amounts of money without oil being at record high prices. So it's not crazy to think that oil continues to the downside, and actually this could stay relatively strong. Now, it doesn't mean it's not going to go down here. You guys know I have targets to the downside. I'm looking to load back up on this if we come back down to those levels, because macro, I'm still very, very bullish on oil. We've went through this chart about a gazillion times, so we don't need to do it right now. We're back on top of 200 exponential. They are 200 exponential and simple are both blue. The 821 has bull crossed again. So it's not crazy to think that we actually continue up from here. I'm not overly bullish at the time, but as long as we're above those and still looking to the upside, I mean, this doesn't have to correct, especially if the inflation does keep hitting. So we'll have to come back to this one. It's supposed to be updated on Wednesdays, but we don't see the most recent move yet on here. And this is just the Fed's balance sheet. We're just looking to see, all we're curious about, and we're not the only one, is, you know, we saw this pretty big tick up here. Now, in hindsight, like, this is what was happening. Fed balance sheet goes nuts through the recession, through the Rona, goes absolutely parabolic after that as they just continue to just inflate bubbles and just create mass amounts of inflation. And then we see it rolling back down, stuff coming off the balance sheet. And then this was our little spike. This was the desperation for the banking crisis. And that basically took us, I mean, give or take, you know, took us back to the highs. So, you know, we gave back down to, what, 8,343,000, and then we got right back up to 8.7. So basically $400 billion. 400 billion. These numbers don't even sound real. 400 gazillion dollars got added to the Fed's balance sheet. 400 billion. Like, just make up a thing. You know, it doesn't even have to be a real measurement anymore. Like, I'm not even sure. Like, trillions, we didn't even think that was real. That was like a joke 20 years ago. Now it's like, oh, trillion, what's another trillion? Throw it in the pot. It's like a poker game pot now. Yeah, so we don't know. We'll know. Obviously, it's supposed to be updated every Wednesday, so we should get the numbers updated by tomorrow. So, all right, let's look at our big tech and dollar real quick. So DXY here, we're still just paying attention to that low. You guys know, maybe we get it, maybe we don't. I don't know. You know, we're not always going to get exactly what we want. I want to see a lower low on the dollar. I want it to come down to like this 98 range. We got a cluster of support. Doesn't have to happen. It's pretty beat down already. We're basically at that previous level. If we put in a higher low right here, You know, one thing that TradingView did recently that's like super annoying is when you used to have your little pointer right here, there used to be just like a really light dotted line that would just go horizontally from your pointer just automatically. And for whatever reason, I guess they got rid of it. Oh, okay. If I switch to the cross, it still does it. Okay. So I can go over the cross here. So what we're looking for basically is this low right there. Do we come down and take that low out? And then, you know, correspondingly, do we put in a new low right here? And that would obviously, you know, depending on what happened, could potentially give us bullish divergence. So like here on the TDMACD, we have a big hump to the downside here. That's our initial low. And then we have a much lower downside hump right here. And that's substantially lower, but higher on the actual indicator oscillator. And then here now, we're still technically higher on the indicator oscillator. If we were to push down and put in a new low, that would be, you know, another drive of bullish divergence. Now, here's the thing. We already tested back up here at 200 exponential and simple. We didn't quite get to the 200 simple. So my base case is that we actually come back up and touch the 200 simple and then go lower. We don't have to go touch the 200 simple before we go lower. But over time, I think the dollar will go higher long term. But daily time frame, short term, there's a good possibility we go lower from here. I mean, everybody's banking on the Fed pivoting. Even if the Fed pauses at the next meeting, that might make people think, hey, that's it for the dollar. That's it for the USA. They're done tightening. It's just a matter of time before QE comes back up. I mean, the banking crisis caused obviously a lot of weakness in the dollar because people are like, oh, they're about to turn the money printers back on. So, all right, so Tesla's starting to roll over here. We know obviously we have that double top scenario. Didn't quite get up to 200 simple. Again, that's what we want to see is like when we come that close and don't get it, we usually come back up and then get the push. So not crazy to think we're still going to get that push up to 216. But if not, you know, you guys know what it is. As soon as we break through that previous support at 168, this looks like a double top. And then we get the measure move, close the gap at like 146. And then we'll reevaluate the pullback. We're going to be using, you know what? I'm going to get rid of all this old Tesla trade setup since they're done now. I mean, we could technically leave this one. I mean, we took profits on all of these. Absolutely nailed it. Congratulations to anybody that was buying the dirtiest of dirty when everybody hated it. The cult literally quit Tesla after the measure move played out at the absolute bottom. We bought it like within a couple of dollars, the absolute bottom from the cult. The cult members of Tesla sold us their Tesla stock at the absolute bottom, and then we sold it back to them at the top. So, I mean, maybe it's not the top. Maybe it just goes to the moon or whatever. We'll see. But that's it. Trade setup has played out. As far as I'm concerned, that was our back test, our reversion of the mean. I expect us to come back down here. What we need to do is see, okay, when do we buy it back from the cult? You know, when do they quit again? When do they give up? When does their conviction go from hero to zero? Probably soon. So we got the initial test to the 3. Look at that. Beautiful. Look at that. Absolutely beautiful. Let's change the color on this to white. And just take a look at this. Whoa, I don't know what I just did. Oh, I changed the... Come on. Trading view. Change the little dotted line, but not the actual thing. Okay, so here we have from the low right here to the high right there. We came down exactly to the 382 on the initial push. Then we came back up, put in a lower high. So the next target to the downside would just be our next Fibonacci, which is also that closing of the gap. So what we're going to look for when we get down there, it's not going to be super technical, so we don't want to use the squiggle tool. We'll stick to something like a little more sloppy, something like just a little box. Not all boxes are sloppy, but there's a little slop in all of them for sure. So if we come back down here to the sloppy box at the 0.5, at the bottom of the channel, this channel is important. We broke down from it. Oh no, it goes to 0. Measure move, what is that? The distance from the top of the channel to the bottom of the channel. Oh, look, it played out perfectly. I mean, whoever's manipulating or you know, whatever, market making the price of Tesla obviously does the same thing we do. Like they might as well have the same charts as I do. Matter of fact, they might work at TradingView and be the ones that are like gremlining all my shit when I'm not on here. But that being said, they're clearly using technicals. So we might as well just do what we're doing, but acknowledge that Tesla does exactly the same thing as we do. So that being said, we have a lower high. We would expect a lower low, that 0.5 target, 151. So should we try to take another load up at the bottom of this channel? I mean, it's played out really nice. One time it broke down from the channel. We got stopped out in that trade. We did. We got our dicks kicked in on that. I mean, not really. It was like 6% or 7% or something we lost. Got out. And then what did we do? Bought the absolute bottom. And that's why you have to have conviction. If you don't have conviction in your trade setup, if you don't have defined risk reward, probability of success, all that good stuff, you're going to paper hand it up just like all those Tesla bums did. And then you're going to end up selling me your Tesla, and then you end up buying it back here at the top, only to get Elon to dump on your face, which if you're into that stuff, that's fine. But yeah, that's what I'm looking at. 150, maybe a little lower for that gap close. So we can account for that little gap fill right there. I mean, is this going to be like a thing where I have to constantly change? So yeah, that looks about right there. So that's what we're looking at. Voila. Look at this. Microsoft. So we had that big descending channel. Man, there's so much trash on all these charts. I'm about to start over new on these. Anyway, so top of the channel down here in red, descending channel, move. Breakout. Start riding up on the channel right here. So now we're inside this blue ascending channel right here. We hit the low. We back tested the 0.5. We came back down, kept above the 236. Not a like super technical bounce right here, but now here we are at the 618. So we topped at the 0.5, we topped at the 382, and now we're topping at the 618. So what did we do the last couple times when we topped out? Well, we topped out initially at the 382, we came down, revisited the lows, slightly higher low. Then we went to the 0.5, then we came down 1 and 2/3 of a fib level, as opposed to here we went down 1 and 2/3 of a fib level. So basically the same thing. So here we're at the 618. So if we go down 1 and 2/3 of a fib level, we're looking at a buy on Microsoft somewhere around like 261, assuming the trend continues to the upside. And we know, obviously, we don't want to get cocky on this thing and wait too long to try to buy like the absolute low. We want to just look to like swoop the cluster. Okay, this is more appropriate area where we'd use the squiggles, but I don't want to abuse it. It's great power, comes great responsibility. So here we have 200 exponential, we have 200 simple, we have our 382 Fibonacci, we have the ascending support of the channel right here. That's what we're expecting. Microsoft, straight down, 100% exactly to our target. Here we buy it, and then after that, it goes straight to the moon because of the AI, obviously. So that's it. Done. You're welcome. Apple is next. So this is that same scenario we talked about playing out here. We're basically at key resistance. We broke out here. It looked like it was going to the moon. We shorted it. We wrote it down. You guys already know we crushed it. Obviously, closed our short. Didn't quite get to our final target on that. Since then, it has ran straight up. So, obviously a great decision to close the short back here. So it ran straight back up. And so far, it's a lower high. So far, it's a 786. So far, it's a slight overshoot of the descending resistance, similar to what we saw in the past. So should we start paying attention to something along these lines now? Yeah, probably. Should we look for another round of short for Apple? Try to hit it again. I mean, do you really want to fight the buffet? Do you want to do battle with Warren? Yeah, I don't think that's a bad setup. So, I mean, it's so tight too, 5.49, stop loss 17.6. And all we're saying is we're just going to revisit the lows, but not necessarily put in like a new low. And, maybe we even tighten it up right here and say we're not going to break down below that yellow support, even though it hasn't been like a strong support. Matter of fact, the 236 has been. So let's just say it was right here. 13% downside, 5.5% upside. We are in a bull market because we're above the 200 exponential and simple. I think that's a deal breaker for me, honestly. I mean, we're almost at 3-to-1 risk reward, so we could do it, but I'm going to pass on this one. Apple is too strong, it's too culty, and it is above the 200 exponential and simple, both blue. That's a pass for me. What's going on, Alex? Good to see you. Appreciate you chiming in the chat. If you are in the chat and you haven't said hi, say hi, because I appreciate it. All right, so Google is next. So Google's been a big underperformer. We do have this ascending support line. We do have our 0.5 fib. We got back above the 382. We're above the 200 exponential, above the 200 simple. They're very close to flipping to the upside here. 200 exponential already so we still have a little bit of meat on this bone, but that's basically it for this trade setup. But it doesn't mean we're not actually realistically going to come up a little bit higher like that. So that's the next real target, is sort of like that little step. So I'm going to be looking to take some profits on this somewhere around there. But we'll see. I look at Google as more of a long-term play. Obviously they provide this amazing platform. What would I do without them? Meta is next. So at the 618, at resistance, still has this pretty mean gap back here. We never retested the 200 exponential, let alone 200 simple. So in my opinion, we're coming down here. It's just a matter of when and then what you do when you get there. Obviously, I don't have to do anything because I don't really mess with the meta. But, you know, somewhere around there, printing some bearish divergence, a little breakdown, retest, and then at that point in time, reevaluate. But anything, you know, above the 200 exponential and simple, especially with the blue slope, you know, when we come back down to the back test, that's a buy for me. And then if we break down below those, you know, invalidation points, start losing the slope again on the daily 200s, by all means, we can exit those trades, but we got to trust the system. At least I do. You can do whatever you want. You can trust gypsies. I'll trust the trading system. Amazon is next. So having some trouble here at that same spot. So we talked about this green support right here. That was our gap level. We filled the gap right there, broke back down below it. Higher lows right here, and we can't quite get through this resistance. When we do, though, we would expect a quick push up to that 618 again, but realistically, the 0.5 internal retracement is what we're looking for. So we'll see what happens here. Obviously got a real nice entry off that 886 for the first time in all of history. The 886 actually did something. So I guess I'll leave it on my chart for now. But realistically, still a little meat on the bone for this one. Still a little meat on the bone. I mean, realistically, if we can get above that level, we got another like 20% or so. And, you know, if we take out that low right there, we don't want to touch it anymore. I mean, that's like 13%. So realistically, not the best area to be entering off of. I guess realistically, you could manage risk off of the ascending support. Not my favorite thing to do because ascending supports are obviously very subjective. But, you know, if you start breaking down below like 8 or 10% from here, that's, you know, probably a red flag as opposed to that 22% upside, which gives us about a 2-to-1 risk reward ratio. And we're still in a bear market. I mean, this is still very bearish. You know, keep in mind, Amazon did $500 billion in business last year and lost money. So they're a trash company. They're garbage. I mean, they're not technically profitless tech, and they actually do serve a purpose. So they're better than, well, I mean, like all cryptos and pretty much like most companies as well. But they don't even make money. They're a trash company. We know that. So AWS is literally the only thing that even keeps them, well, they're not profitable. Didn't even do it. It didn't even work. I was going to say it keeps them profitable, but it didn't because they went negative. As predicted. Piece of shit. All right, so let's jump into cryptos, and then we'll look at these requests too. How are we doing on time over here? All right, we're getting about 32 minutes in. All right, so Bitcoin on the daily, not much has changed here. Just going sideways right here. As our indicator oscillators trend down, we know typically when this red slope line gets to the blue, or I'm sorry, the red histogram gets to the blue slope line, oftentimes we'll see at least a dead cat bounce off that level. Of course, here we see nothing, but very often we do see some kind of bounce. So if we go sideways here long enough, I think there's potential that we're going to bounce up here, maybe even a short squeeze on this little double top. But we know right now this looks like a double top. And if we break through that neckline, which we tested on that wick down the other day, if we break through that 27 level, then 25 comes in, possibly even lower. But again, I'm looking to be a buyer. Anything that has a chart like this, bear market, bear market, bear market, bear market, start of the bull market, you know, I like it. I like it until it's not. And it's very, very possible that it breaks back down below the 200 exponential and simple and they flip back red again. But in the meantime, you know, I might be scalping in and around these 200 moving averages, but I look at those 200 moving averages as a buy as long as we're above them and they are blue. Futures chart still looks very, very similar. Hard sell signal coming out of the bullish control zone, bunch of red histograms. Looks like it wants to test the downside. For whatever reason, the market makers don't want to let it happen. But I mean, 25K is a massive magnet and it's going to pull us in. It's just a matter of time. So ETH got bored, had a little breakout right here. We're going to talk about the shit coins, including ETH, even though it's like still kind of borderline. It's like almost its own thing, but still is a shit coin. So we're still going to classify it as one of just the trash cryptos. But that being said, testing the previous highs right here, which is the highest high since it put in the lowest low. So this is the key area to break through, like 2000 basically. And if it does break through there, then we start talking about these upside targets that we've had for freaking ever. Clearing the 0.5 is big, but the 618 is really what we're looking for, 2561. If it has any legs behind it. I mean, we know ETH is trash, so we'll see. But it is above 200s, looks okay. All right, so let's talk about the bull case on this and what could be happening here. So this is our total weekly market cap. So here's the issue. We're bouncing off resistance right here and we can't get above it. This is 4 weeks in a row at this level and it just does not want to break. So at some point in time, obviously one thing's going to happen or the other. We're going to either break through this or we're not. If we break through this, that likely means Bitcoin's breaking out, which means likely altcoins are going to break out, which means the whole market cap of everything's going to go up and there's going to be just gains for everybody. But if we don't get through this, likely what's going to happen is we're going to see money come out. And this is just fully my opinion. I might just be completely wrong, but also we'll just look at charts that prove it. Likely what happens here is if we can't get through this level right now, we're going to come back down and recharge. We're going to refill the engines. And when we come back down here, a bunch of money is going to come out of Bitcoin and go into shitcoins. People go further out the risk curve as the market starts to look better. So on the back test right here, I expect shitcoins to surge. You know, before eventually, potentially, this goes to the upside. I mean, there's a lot of bullish signs right here above the 200s on the weekly. Total market cap could go up here. So, you know, we could break out to the upside. Everything surges. If we don't, I expect Bitcoin to weaken relative to altcoins. And we're going to look at that on the Bitcoin dominance chart right here. So this is Bitcoin dominance with everything. Altcoins, stable coins, Ethereum, some made up coin I've never even heard of. It's in here. It's all in here, okay? So we're trading inside this range right here. We're bouncing off the bottom support. We're bouncing off the top resistance. We're at the resistance now. Top, top, top. Starting to sell off. This is money coming out of Bitcoin and going into altcoins, or coming out of Bitcoin and going into stable coins. Well, which one is it? You just said two different things. Well, let's look at our other Bitcoin dominance chart. This one is excluding stable coins. So again, we don't have that defined range the same way. You know, we basically were just going sideways in a channel right back here. Well, we already broke out of that once, came down, and now we're well above that channel. So this is actually much more bullish. So this tells us Bitcoin is gaining against altcoins. But in the meantime, this is our trend line right here. It's not crazy to think we're going to come back down and test this trend line again, or just kind of go sideways and bleed out a little bit of Bitcoin's value. And we know a couple percentage of Bitcoin dominance can equal a big move in, you know, a few cryptos. So that's what we're looking out for. What are those big cryptos going to be? Obviously, XRP is one. Oh, sorry, I had to clear my throat there. I don't know if you guys could tell, that was definitely sarcasm, but so XRP did finally get above the 200 exponential and simple. Looks like it wants to test back to the downside. Bunch of red histograms, obviously. You know, this just happened so quickly. There's no real support. Now, we did chop around in this range for quite a bit of time. So there is a lot of support from that. But at some point in time, the market will want to retest the 200s. Kind of broke through there and retested it. That doesn't really count, though, because that's like an auto buy when you break above the level. What you want to do is like see price kind of go sideways, see some selling pressure come in, and then people actually buy at the 200s. That's what you really want to see. And that's typically the best time to buy before a new bull market. So XRP bull market, no, it still hasn't put in a new all-time high from the last bull market. So it's still trash. But BNB, though, did put in a new all-time high. It is above its 200 exponential and simple, and actually looks okay right here. Looks a little bit of weakness, 821 bear cross, down at the bottom of the range though. So could be ready to get a nice little bounce from here. And you guys know, obviously BNB, in my opinion, if something's going to break, everybody else calling for Tether, I think it's going to be a Binance related scenario. So that's what we're paying attention to if that does have issues. So Matic is next. So I did let the group know today. Obviously, it's not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research, trade responsibly. We entered a Matic trade back here off the 200 simple. Had a nice little move to the upside. Still up quite a bit on that one. I think it's like 13 or 15%, something like that, roughly. Now we're crossing back above the 821. We're very close to this bull cross happening again, and we're above the 200 exponential and simple. So same thing, you know, bear market. Here we go into a bull market. Here we back test the 200s, buying opportunity, lower high, which isn't great, but then a higher high. And now here we're getting the bull cross 821. So if this thing's going to go to the upside, we know obviously when that bull cross happens on the daily, you know, usually leads to a nice move, could easily be a little chop like this. So I'm expecting some chop, but we're on top of the 200s. Since we got on top of the 200s and they turned blue, we had an 821 cross right here underneath the 200s. They turned blue shortly after. This is going to be our first 821 actual bull rally in what is presumably a bull market, as we see a bunch of green histograms getting ready to cross over the red slope line, getting ready to cross over the zero line, and printing a hard buy signal. So is Matic going to zero? Probably. But you might be able to scalp a little something out of it in the meantime. So that's what I'm paying attention to. Obviously, we're liable to catch a case on Matic because we have abused the hell out of this thing. We have literally just, scalped this thing to the point where I can't believe it's still alive. But that being said, Next move to the upside could go either way on this one. I think I actually had it charted out on gotta grab that wick in there. So we made it above the 618 that last time. So realistically, the 786, that final target up here at about $1.82. And then after that, we're talking about, you know, potential upside targets. So we shall see. We shall see. I don't want to get overly bullish on cryptos right now. But relative to altcoins, you know, Bitcoin, it looks stronger than most of them. But there's definitely some potential here if that Bitcoin dominance comes down. So basic attention token, another one that people don't love or whatever, but there's some opportunity here. It's just now getting back above the 200 exponential and simple. Been a very clear bear market for a while. Started to push up here right now through that 236. So here's our macro low. We came up to the 236. We put in a higher low as that ascending green support, and then we back tested the 236. Next upside target would be either the 382 in orange, which is the internal from top to bottom, or from the macro low to high in blue. So we kind of have like those little areas targeted between key slivers of support or resistance. So here we have the orange 382 and the 0.5, and that's a 54% move from where we're at right now with 13% stop loss. That's 4-1. And then here we have between the 0.5 and the 382 target. 0.5 is orange this time and 382 is blue. See how they reverse, obviously. And that gives us about 100%, call it 118% upside with 13.5% downside. So it's 8.7 to 1 risk reward ratio. Does it go to 0 and everybody loses all their money? Of course. That's why this is just entertainment. But if this thing was going to have a pop, if this trash crypto that nobody wants, nobody uses, and it serves no actual purpose whatsoever, insert sarcastic quote here, I mean, that's what it would look like. So is it going to happen? No, it's probably trash and it goes straight to 0. But maybe we just have an extra 54% in our account instead. So we'll see. All right. So on to some of the member requests here. Just assume that whatever this is we're looking at is complete trash. And if you put any money in it whatsoever, you will immediately lose that money and probably like not be able to sleep at night. And I don't even know, man. You know, you're going to lose one of your shoes and break your favorite shot glass. Just like bad stuff happens to you if you buy STX, whatever that is. I'm sure it's trash. Stacks is what it is. So here we have basically bear market starts right here, back test, meltdown. And then here, back above the 200 exponential and simple, surges to the upside. We see some very, very clear bearish divergence right here. Much higher peak, much lower peak. So we need to see how that plays out. And I imagine it's going to play out at some point in time at the retest of a 200 exponential and simple. This is our first 821 bear cross. We got one for a second here and then it went higher. It's bear cross for right now. So until this comes back down, gets a retest and the bearish divergence plays out, not a lot I can do right here. I mean, this thing has already gone parabolic. You can't really do anything with this. I mean, it was 20 cents not long ago and now it's 84 cents. So it's like 4x off the bottom. So it could literally lose like 75% and not even like put in a new low. So there's nowhere to enter into a trade at this point in time. You have to wait for it to come back down. And realistically, a retest of 200 exponential is just going to give you like a double top type scenario, maybe even like a head and shoulders scenario. So realistically, we need to see this thing back in like the low 40s before there's any chance to reload. And that means if you're in this thing right now with the 821 bear cross in full effect here, I would have taken profits already. We're in the bearish control zone now, so maybe not the best time to sell. Not a lot to do right here. So looks okay though. It's back above 200 exponential and simple on the daily. So that is good. Next we have INJ. Again, not sure what this is. INJ, it's definitely a crypto. And here we are above the 200 exponential and simple. Here we see a back test. That's what you want to see. Why do you want to see that? Because it tells the market that somebody actually wants this. They didn't just ride it up here and now they're going to dump all their profits and go trade something else. It says there's still buyers now. We were bearish. We had a nice move to the upside. And then there's still buyers above those levels. So that is good. If we just slap on a little fib from the highs to the lows. Perfect retest of 618. So I would be very, very careful that this thing hasn't topped out already. And obviously it has been respecting these levels very, very cleanly with like full on scam wicks. So we know 100% sure that whoever is market making for whatever trash crypto this is, INJ. They are 100% using Fibonacci's and moving averages. So we should definitely just do the same like we always do. So keep it up. Keep up the good work. All right, man, I'm squeezed for time here. So we're going to jump over and just do these last couple of requests, and then I'm going to get out of here, and just keep your eyes out for that static video. So we got Kratos Defense and Security Solutions, KTOS. So this has basically bear market for a long time, couple reversion of the mean retest, back test, back on top of 200 exponential and simple, finding support. Looks like it wants to close that gap and come down here to 200 simple. It looks like it wants to come down to 1184. But that's going to look like a buying opportunity, honestly. This thing looks very much ready to just enter into a new bull market. Could it fail, roll back over, and then go down? It definitely could, but it looks like it wants to at least try to get a move back up here. So that's above the 236. So next target would be the 382 at about $15 dues. All right, and then last but not least, we're going to look at Upstart. Again, absolutely beat down, completely crushed, definitely trash. Upstart Holdings. It's basically just at zero right now. It hasn't gone there completely, but it is well on its way. And here we see it is, I mean, it's off the lows by a little bit right now, but nothing too crazy. A reversion of the mean retest of a 200 exponential or simple, or just, you know, we got to 236, sort of failed. Another retest up there is like 28 bucks. So there's definitely some meat on the bone with this one. Obviously, got to be careful, but there's definitely some meat on the bone. I mean, here's the thing. The first thing to move is the most bullish stuff. The second thing to move is the most bearish stuff. And then all the just kind of regular average stuff moves. And then the last stuff to move is just the complete trash. And usually it has some of the biggest moves because it's such trash and it's so hated for so long. And anything that looks like this, and we're actually going to look at a chart like this on the static videos, anything that looks like this is complete trash. So just expect it to go to zero. But the potential is massive because it's probably going to go to zero. But realistically, massive gap down here at 68 bucks. So at some point in time, it either goes to zero or it fills that gap at 68. And that is a big move up, like a 4X. So, but that's it for today, guys. Sorry, I got a hard stop. So we got to go ahead and call it there. Keep your eye out for that static video on gold and some other good stuff as well. Appreciate everybody tuning in today. But that is it. Remember, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. So please do your own research, trade responsibly. It is 8:52 p.m. Eastern Standard Time on April 5th, 2023. And that's it for tonight. Crypto Trend Trader